One question we get quite often is when do we actually see the benefit of the R&D tax credit? And it is a good one because there is going to be a little bit of a timing difference, and that's depending on the company and their current scenario. So a great way to think about this is that the R&D tax credit is a tax attribute, it is an asset, not a cash payout. Another example we often give is that essentially a credit is like you're earning points. And once you earn these points, you really need to have an event in which to apply these points against. Now, sometimes for a company that could just be months when they file their tax return, or sometimes it could be years when eventually they become profitable and applied against their future tax liability. Some startups, if they're utilizing it to offset their payroll taxes, this could still take a little bit of time. First, you need to file the tax return, and then the payroll tax offset comes months later on. Now, just because there is a timing difference doesn't mean that the tax credit isn't valuable, it just isn't very fast. In fact, anyone promising a quick R&D cashback, you should really look at it a little bit closely. Speed usually comes from aggressive assumptions or weak documentation. The companies that get the most value from the credit treat it like patient capital, not emergency cash at the end of the year.